Welcome everybody to this EESTEL webinar about digital currencies. So we will touch cryptocurrencies, stablecoins, and central bank digital currency. The overall objective is also to try and show the links between these currencies and payments. So we'll start with some basic definitions, not too basic, hopefully. And we'll try to cover all aspects. So the agenda is the following one. There will be a presentation of the EESTEL Association by Eric Nizard. Then I will introduce these basic definitions and differences between crypto, stablecoin, CBDC. Then Mr. Godeffroy will teach us about the motivation, the features, and the challenges of CBDC, namely Central Bank Digital Currency. Mr. Fernandes will give us a picture of the worldwide market status for CBDC in terms of projects and providers or solution providers. Then I will try and describe what CBDC and payment should come together. Again, we were supposed to have somebody from the crypto world to talk about the crypto industry and the links with payments, but unfortunately she couldn't join today. So I will do some smaller and maybe less broad description of this. I hope it will be enough. And then Ms. Giori will give us a full picture of the European regulations on digital assets. And well, finally, Pierre Crégo will help us with the questions and answers that you may ask during the presentation on the chat. Okay, so I leave the floor to Eric Nizard, and I will be the one doing the clicking. So just tell me next when you want me to click.
Thank you, Christian, and welcome everybody to this new event organized by EESTEL. EESTEL is a European scope association of which founding principles are the excellence of a federated network of specialists, namely smart cards in the beginning and various form factors today, and complementary specialties which cover a wide spectrum, starting from service architecture towards technologies and technical architectures, essentially through projects. Could be project management, could be testing, could be certification approval, and so on. The DNA that represents EESTEL also is its full independence from any financial or industrial interest, and the main activities of the association itself, as the association assets are its experts, the main activities for the association towards the experts themselves is decrypting the economy evolutions, and today is an event that perfectly illustrates this. We exist. We have 25 years this year in 2023, and we gather 33 members, summing more than 1,000 years of expertise. Next, Christian. What did we do in 2022, we worked on various subjects linked to the electronic transaction system and beyond, as we organized 7 events, starting from open ticketing, IoT, which is a topic, which is a theme that we deal with more and more. We also participate in bigger events like FIC on cybersecurity or Trust Tech, which will occur this year between the 20th and 30th of November in Paris. We also deal with MPOS and SoftPOS, the evolution of point of sales terminals and infrastructure. And also we are working on authentication and verification of the remote persons, of their identities. This was forced in the beginning by the COVID situation, but it helps it, and it makes more efficient the relations between some authorities and the public and the people. Next, Christian. On the reel for 2023-24, we expect to organize soon an event on the PIN online. Last month, we explained what the Nexo standards are, together organized with the Nexo Association, whether the specification or the approvals and the worldwide deployments. It seems that the Nexo standards are more and more deployed, and this is good for interoperability. We are planning a big event on the identity card and the electronic signature around the eIDAS topics. Again, with a payment, mobile payment cards over the shelf. We again plan to work on authentication, and we did it this year with no issues and no trends. Today, and it is not finished, we will speak about it at the end of the session of today. We, for the first time for EESTEL, we speak about digital currencies, and especially today about their institutional representations, as Christian was presenting. And hopefully it seems that our hopes will be satisfied. A presentation of what the European payment service payment strategy will be around the EPI's initiative, which at least has presented something that may be efficient in the next month and years. And yes, that's a small message. It's sooner we will organize a general assembly. We are going to brainstorm about new topics beyond with the ones I've just presented here. And also, occasionally, we are looking for a new board. And if anybody is interested, please come to us and we'll discuss about it. Next, Christian. As I was saying, we have mounted different partnerships with various institutions, FIG, Trust Tech, I said it, Association du Paiement, which we're working with them for many, many years, as well as France Payment Forum, and Crésit about the electronics architectures that are able to illustrate the principles of electronic transaction system and more beyond, and so on. So merci, Christian. This is our board for 2021-2023, which will be changed in the next weeks. So please keep in touch and come to us whenever you like. Thank you very much, and I'll give back the microphone to Christian.
Thank you, Eric. Okay, so now we're going to go through some definitions of cryptocurrencies, stablecoins, CBDC. It will start with, it will contain some technicalities, of course, very basic and maybe simplified, because it's necessary to understand how these currencies will connect with the payment web. So let's talk about currencies. You can define two words: the traditional one that we could call sovereign or fiat currencies, the one you already know. So this is about banknotes, coins, but also bank accounts, electronic money, and a brand new one that is Central Bank Digital Currency. These ones are issued by nation states or monetary unions, but also by private financial institutions, as we will see. And then there's these new words of, it's a bit confusing about cryptocurrencies, stablecoins are there, tokens. There's a mix between the wording for this, but we'll try to be, we choose one this way. So cryptocurrencies is a generic terms that includes what I would call native cryptos. We'll explain on this, and stablecoins. And there are other type of tokens as well, of course. These ones are issued by not nations, issued by communities or private entities, and they are all based on, of course, based on these blockchain protocols and smart contracts. So, sorry, we are going to go through these definitions of these basic definitions of blockchain and cryptocurrencies. So very basic. So as you know, blockchain is a family of technologies, not just one. And it's about creating a distributed ledger that can be shared by all participants of a given network, okay, on a pseudonymous basis. That is, you have some kind of identifier, you're not directly known on the network. And the ledger, of course, is here to record facts or events, and typically, in our particular case, financial transactions and holdings. There is no trusted party, and as there is in the traditional, I would say, finance or monetary systems, it is replaced by a consensus protocol that has been pre-agreed between network participants. Of course, the protocol requires that some participants are there to validate the transaction. Not necessarily all participants, but some of them, which are called, depending on the blockchain, miners or validators or whatever. Key point is, because there's no trusted third party, then somebody needs to validate the transaction before updating the shared ledger. Of course, the protocol is there to prevent any double spending of holdings, to ensure the immutability of the ledger. This is a key of the blockchain approach, and of course to protect the network and the ledger from any malevolent behavior for one or a group of participants. Okay, so of course, validating transactions means IT processing, so means IT resources. So why participants, and especially validators, would spend their resources on this particular network? The answer is that they are rewarded for this because they receive some money for their participation, for their validation of the transactions. So instead of everybody paying a fee to, let's say, MasterCard to validate transactions. Here, it's a more distributed responsibility, and it's an automated process that reward the validator. And because you can't reward it with fiat money, then there is a native, well, let's call it native cryptocurrency that is here to incentivize the validator to participate into this payment network. A key thing in these blockchains here, I must say, here I'm talking public blockchain. There are private or permission versions of blockchains, but we use the technology, but because it's between known entities, there is no need for the incentives through a cryptocurrency. So here, in the rest of the presentation, it will always be about public blockchains. And public blockchains means the software that is implementing the protocol is an open source. It's publicly available. Everyone can install it on his own laptop or computer. But the software, of course, must be governed. It's not a one-shot. It's developed by some community, and then it may evolve. Of course, we have seen there's always evolution and bug fixing, for instance. So there is some informal community to govern this software. Depending on the blockchain, the community may be more organized and more formally, a bit more formal, but let's say legally they don't have a formal existence. Okay, then the other part of the cryptocurrencies is tokens and stablecoins. So these ones are not linked to incentivizing the core feature of validation of the transaction. They are actually issued by through what is called smart contract by private entities or communities. Smart contracts basically is a piece of software that can be executed automatically by a blockchain network. Any participant, you and me, we can install a smart contract on any blockchain. But of course, it's still on the blockchain view that everything is visible. So, and that's how trust is built. So the smart contract code is visible to all participants. It cannot be changed, and is not the code that is on the blockchain is not controlled by even the people who have installed it first. So what is a smart contract? So it's some logic that is run on the blockchain, and you can see it as some kind of robot participant on the blockchain. That means that as a participant, it can receive transactions, and then smart contract owns the received funds. It's not an entity, but smart contract owns the fund. And it can also generate transactions according to its own logic and what happened previously in terms of other transactions. Now, smart contract can be used on many different applications. And in our case today, the main objective is the issuance and the redemption of tokens that can be used for payments. So, as I said, you need an entity, so it can be a private business, or it can be, again, a community of open source developers joining together to develop and also install the token smart contract on a given blockchain. Then the tokens are automatically issued in exchange for payment in other cryptos or other token. All this is done by the smart contract. And sometimes, not always, there can be rules to limit the number of issued tokens, or I would say the control of inflation in terms of the token that is issued by the smart contract. Okay, so then to compare the various currencies we have talked about, we are going to talk about today. So a currency is the key characteristics of a currency. The question you may ask on a currency is what is the source of trust in the currency? What is the availability of this currency? Can you use it everywhere? Can anyone use it? And can you use it anywhere and at any time? And what is the actual market of the currency? Say, what are the actual use cases where you can actually spend it? So that's what three characteristics that can discriminate or the various currencies available today. So starting with sovereign and fiat currency. What is the trust, the source of trust of fiat currencies? The usual one, dollar, euro, Japanese yen. We all know banknotes and coins, of course, they are issued by the central bank. So the source of trust in this case is the issuer reputation. Is the central bank solid and credible? A monetary policy that is public, and generally, what is the economic strength of the jurisdiction of the central bank? Okay, then we have also in the same currency, let's say euro, we have bank accounts, which is a different money because it's issued by a commercial bank, by credit. And again, the source of trust is issuer reputation. You trust this bank. Usually, we don't even ask ourselves about the bank of somebody who wants to pay us because we have a stable financial system. There's this obligation of some fractional reserves at the central bank, and also, of course, and more importantly, even is the regulation and the oversight by authorities, namely, typically central bank. And we have a more specific, another kind of private money that is electronic money that is issued by e-money institution. Again, reputation. This time it's about full reserves, not at central bank necessarily, but can be a commercial bank. And again, there is some regulation and oversight by authorities. So particularly in fiat currency, sovereign currency, is that some are issued by central banks, some are issued by private entities. And what is new is the CBDC that is appearing, and actually CBDC trust channel, I would say, is exactly the same as banknotes and coins. It is something that is issued by central banks, so benefit from the trust in the central bank. In terms of cryptocurrencies, the source of trust are quite different. So let's talk about these native cryptos. So the most famous ones are called Bitcoins, Ether, Sol is, has appeared more recently, maybe a bit less known. So as I said, the issuer is some blockchain software governed by an informal community. And the source of trust in this particular crypto would be how the community is governed. The fact that the monetary policy is actually pre-set in the protocol, mostly in most cases. So it's very transparent and visible to everybody. There is a censorship resistance of blockchain. That means that it's nobody is supposed to be is able to actually prevent you to spend the holdings you have in this particular crypto because of the way blockchain is designed. And as I said previously, also immutability of blockchain, so nobody can tamper with your holdings on the blockchain. Stablecoins are different and have a different source of trust. As I said earlier, so stablecoins, the most known them are USDC from Circle, USDT from Tether, and some DAI, that is issued by a decentralized autonomous organization. So the source of trust for stablecoins, is the issuer's reputation again. But here there should be, they claim to be some full reserves in other cryptos, or in fiat, or in gold, or in possibly whatever. But so far, this claim by the issuer was not so easy to verify. So that's being worked on by the various regulations, of course. Again, it has the same benefit coming from blockchain, that is okay. Well, actually, no. The monetary policy is transparent because it's visible in the smart contract. So you know exactly what is being the policy for this particular smart contract. And the trust in the underlying blockchain, of course. If you can't have stable coins on the poor blockchain, will not be trusted. Okay, so basically to understand that the analogy or the differences between fiat currencies and cryptocurrencies. So fiat currencies, it's a word of jurisdiction. Okay, Eurozone is issuing euro, USA is issuing US dollar, blah, blah. Fiat, the money that is issued is legal tender, so the economic agents are bound to accept it for payments. And as we've seen, central bank, but also commercial banks ensure the availability of this money to the public. And to cross or to to join this jurisdiction, there is, as you well know, plenty of infrastructures and services about remittances, money markets, current banking, blah blah. The traditional cross-border or cross-currency infrastructure and services. But the word for native cryptos, it's not a word of jurisdiction, it's a word of networks. Each network is separated. There are technical means, there are clever ways to bridge them, but by specific entities. But fundamentally, they are separated networks. So you can see a network with like some kind of jurisdiction. As I said earlier, remember that one blockchain is one native cryptocurrencies. Then for stablecoins, it's more about services, because you have to take on board the fact that there are multiple networks. And as an issuer, you decide to issue on one or more networks. For instance, Tether is available both on the Ethereum network and on the Solana network. This is the issuer that is bridging the two. Okay, tokens are identified. Okay, but they are token issuers. Sorry, it's a typo here. The issuers are identified because you need to trust them as well, of course. And there is this claim on the reserves that is essential to the trust in stablecoins. The objective of stablecoins is, of course, to serve really as a currency, not as a. It's not for I would say expecting big gains in trading. So it's a stable value and it's virtually usable for any purchase or on the network where they are issued on.
Pour info, on va faire le mail, je vais vous envoyer un mail pour la traduction.
On entend quelqu'un qui parle. Okay. Then about what is the availability across the two words? Well, you have some exchange platforms that are actually centralized or decentralized private businesses is more in many cases, that allows to swap between native cryptos, between stable coins and across every of these cryptocurrencies, and also, of course, allow for exchanging or purchasing these cryptos for fiat money. So that's where there is some connection with the traditional finance or banking system, where is the fiat money actually. There is no such fiat money in Ethereum on these public blockchain networks. You have no way to use fiat money today. Could be the case if CBDC was issued there, but it's not in the current plans. Of course, these networks have no borders, so question of regulating and assuring the public of quality of holdings is left to local regulation trying to act on these networks. Then quickly about the currencies market. If we look at the values, this is not an exhaustive list, of course. Use case of payments. Already today, there is a specialization of money for paying per use case in a way. So banknotes are used for physical reasons, obvious physical reasons, only for proximity and person to person. Bank account money is used in most use cases. Electronic money is less present in some use case. And the native currencies are used on a specialized crypto economy use cases that we see, decentralized finance, NFTs, blah, blah. And as we said, the blockchain transaction fees have to be paid by native currency. Stablecoins covers more or less the same today, except they are not used for transaction fees. And there is this intermediary level, that's the remittances, where cryptos are already and stablecoins can be used, as well as the other fiat money, traditional fiat money. Will native currency expand into the other use case? It's largely unlikely because it is volatile, because of volatility of these cryptos. Stable coins have been designed to be stable, so they potentially could expand into this world of use cases, but there's maybe no big economic driver for this. And finally, CBDC in theory is designed for day-to-day payments. So it could expand to any of this use case, but of course it's a question of choice and priorities and economic driver for this. So we'll come back to this later in the presentation. Okay. And now I will leave the floor to Jean-Michel Godeffroy for introducing the CBDC motivation, features, and challenge. Jean-Michel, just tell me next when you want me to click.
Thank you, Christian. You can move to the next slide, because as I said, I've never been the CEO of the European Central Bank. I've been, as it mentioned here, a Director General. And my presentation is about CBDC, and it will be, even if I left the ECB 7 or 8 years ago, I still think as a central banker. So you can imagine that my presentation is central bank oriented, even if I'm independent, and you will see on what I'm going to say later. Okay, so next slide. I think I will make two preliminary remarks before I start. The first is to clarify the difference between wholesale CBDC and retail CBDC. What I'm going to speak about this morning is about retail CBDC, because it is a kind of a new kind of money which is raising a lot of policy issues, in contrast with wholesale CBDC, which is simply, wholesale CBDC in fact already exists. It is the electronic wholesale money, which it's composed by the bank accounts at the central bank, or what the economists call the bank reserves. And this category already exists. The wholesale CBDC, usually this expression is used to mention that the use of DLT could be introduced in the way we are using bank reserves in order to improve their efficiency. So this is mostly a technical issue. This is not a policy issue. Policy issue is related to retail CBDC, because this is, as I said before, and I repeat, it's a new form of money which is raising new policy issues. The second preliminary remarks I'd like to make, and that's the next slide, the next slide concerns the digital euro. My presentation today is not on the digital euro. I mean, the digital euro, only the euro system, the ECB and the euro system can speak about it. I just think that it's important to mention it, because now with the digital euro, Europe is really at the forefront of CBDC worldwide, because it is the most advanced project in mature economies. So just 2 words about the digital euro. The investigation phase started in October 2021, and it will end this month. I don't know when exactly, but it needs to be a meeting of the Governing Council of the ECB, where they will agree on the launch of the realization phase of the project. What I've heard is that it's a done deal to some extent. The realization phase will start. Realization phase means pouring real money into the project. And this is, in fact, I have some experience about the projects at the ECB. It means that from that point, only a major problem would have to arise for the project to be stopped. I have not seen once at the ECB any project being stopped when it has reached this stage. So the realization phase does not mean that the ECB will decide to issue CBDC, but it is a point when it becomes very likely that CBDC will be issued. One important point maybe I should mention here is that as all central banks envisaging issuing CBDC, the ECB has clearly stated that they are not going to issue this new form of money without a legislative backing. And this is why there is a project by the Commission, the European Commission, to support the digital euro. I mean, should this project not be adopted, then of course the CBDC issuance will not take place. But this is unlikely as far as I understand. And maybe we'll have the digital euro as soon as 2026, in any case, before the end of the decade. So moving now to the main point in my presentation, I'd like to speak about 3 points: the motivation for issuing CBDC, the main features for CBDC, and the main challenges. Starting by the motivation, I would say that it's not obvious. There are doubts, and I mentioned 2 doubts. One, which is very serious, coming from a member of the Board of Governors of the Federal Reserve, who said, well, CBDC for him is a solution in search of a problem, which of course is not very reassuring. And I also quote a participant in the conference I organized, where he said that he found 32 reasons put forward by central banks to justify issuing CBDC, and he mentioned that for him, traditional bank money would fit in all cases. So this explains that it's not an obvious case to justify CBDC. But I'd like to make that justification, nevertheless, by focusing on 2 points. First, one of the reasons to speak about CBDC is that central banks are thinking in terms of a world without banknotes. Doesn't mean that they want to get rid of banknotes, but they see that banknotes are less and less used for making transactions. I have no figure here, but you have seen several of these figures. I mean, the decrease in the use of banknotes, not only banknotes held, but in the banknote used as payment, as means of payment, is dramatic and in many countries. And this justifies at least thinking. And I found 3 reasons which have been mentioned as a consequence of the fading away of banknotes. First, central banks say, I mean, we need a safe haven for money in case of loss of confidence, especially in bank money, in the case of a bank run, for example. Some economists mention that without banknotes, money will lose its monetary anchor. I mean, I have myself doubts about this because I've not understood why wholesale CBDC could not play that role. But nevertheless, this is a debate for specialists. Let's say, let's keep it on the practical world without banknotes. In case of loss of confidence in the bank money, there is no alternative. We are in a war to some extent. The second argument, it was made first, I think, by the Swedes. It's if there is a banknotes disappear, there is a loss of alternative to private money, and especially in countries where there is a big concentration of the banking world, there is a risk that the provision of money becomes an oligopoly. And that may trigger excessive costs for society. I mean, this is the case for banks in, say, in Europe, but also for mobile money in Africa, for example. The third point is that if money is entirely privatized, there may be a loss of interest by the issuers for the non-profitable segments of society. And then, therefore, there is a risk of loss, the risk of financial exclusion of some segments of the population. So that's the first kind of reason, the one linked to the banknotes. But there is another reason which has come more recently, and that's the next slide. It concerns what I called on the next slide, I called it the Libra wake-up call. You have noted that central banks have poorly or have not really reacted too much for when Bitcoin was created and what Christian called native cryptos. I mean, this was not a threat on money. What was more a threat was some forms of stablecoins like the Libra. And then the central banks, especially those outside the United States, started thinking about a world with Libra or any similar stablecoins. And they realized that these entities issuing such stablecoins, there will be insufficient leverage on them because they are foreign-based and under the responsibility of a jurisdiction outside of the country. And this is already true for international card schemes like Visa, MasterCard. That will be even more true for stablecoin issued by Big Neck. But you could also speak about telecom companies in Africa, for example. And that entails a number of risks. First, the risk, what I could call a sovereignty risk, the risk that the country is hit by decision taken by the home countries of the foreign payments providers. Then the risk of losing monetary control. For example, if stablecoins in dollar is used in my country. it means that part of the money supply in the country will not be under the control of the monetary policy of the country. And then, of course, the risk of misuse of payment data and the risk of data transfers to other countries. So, to summarize the point, why do central banks want to issue CBDC? The answer is in the next slide, the summary. I think it's a sovereignty issue. The central bank envisage issuing retail electronic central bank money to avoid that money is entirely privatized, possibly took by foreign entities, because of the disappearance of banknotes and because of the emergence of stablecoins issued by foreign entities. And the aim is to ensure that public policies in the country or in the economic zone, monetary zone, can be enforced. And you see in particular 3 cases I mentioned here, China, EMU, and US. In China, the problem was the competition from the private form of money, and especially from, you have heard about WeChat Pay and Alipay. In the EMU, I think the driving force was the challenge of the big techs. And you also noted that in the US, it's a less pressing issue, CBDC, especially because most of the, let's say, newcomers in the world of money are US-based and therefore under the control of the US authorities. And then I'd like to make a remark for those who have followed the history of Europe, and in particular, the inability of the European banks to design a European card scheme. And I think the digital euro is an answer to this failure. If the European banks had been able to create a credible card scheme, I guess the pressure for creating the digital euro would have been less strong, weaker. Okay, I think that's it for the main the reasons to create a CBDC. Now I'd like to move to the main features, and it is not just the digital euro. It is always it is what I see in most projects. First, and I don't want to be too technical, but one point which is important: CBDC is always in the balance sheet of the central bank. It is a liability of the central bank. The idea of hybrid CBDC or synthetic CBDC is not accepted by central bank community, at least most of the central bank, the G20 central bank, for example, because these are not liability of the central bank. This idea of hybrid CBDC or synthetic CBDC is the idea of a private entity issuing money which is backed by central bank money, in particular CBDC, wholesale or retail or whatever. I mean, this is not considered a CBDC because there is an element of risk which is not under the control of the central bank. So first point, CBDC is always a liability of the central bank, like banknotes, like bank deposits, like bank reserves. Next main feature, the central banks will use intermediaries. They will not interface directly with the final user. So the idea is that central banks will use intermediaries, could be banks or could be also regulated non-banks, for distributing CBDC. And this is very similar to banknotes. But of course, from the bank's perspective, it's different, because in a bank account, the money is a liability of the bank. In CBDC wallets or CBDC accounts held by a bank, they are, in fact, this is not in the balance sheet of the bank, because it is in the balance sheet of the central bank. It is simply an account which is helping the final user to be in relation with the issuer. And this is very similar to securities account today. For those who know how securities function, the securities business function, it's very similar to the way CBDC will be distributed. Another main feature is compulsion and no compulsion. I think, and here, of course, I'm influenced by the digital euro. What is important is that central banks typically say, you're not going, the final users will not be obliged to use CBDC. There will be other options. However, more and more, they wish that CBDC becomes legal tender. It's not a decision of the central bank, it's a decision of the legislator to decide whether a form of money is legal tender or not. But there is an idea that it should be legal tender for a simple reason. It is to force the intermediaries and the merchants in particular to accept CBDC, and therefore to create the network, which is indispensable for CBDC to function. Next feature, there will be limits. This to the holding of CBDC. I don't want to be too detailed about this, but what is important is to avoid that there is too big disintermediation of banks in the process. The central banks want CBDC to be used as a means of payments, not as a savings instrument. And the reason behind that is to make sure that the shift of deposits from the balance sheet of the banks to the balance sheet of the central bank is limited. Because if it's not limited, then it would raise major funding issue for the banking system, and it may disrupt their other function, which is to grant credit to the economy. And that's why there is a policy issue behind CBDC, is the risk of bank disintermediation, and beyond that, the risk of financial stability for the country. So in all systems, there are all that exist today, in my knowledge, there is holding limits to avoid that too much deposits move to the central bank books. Next question, privacy. Privacy is very simple. What I've understood is technical issue. I'm not a technician, but what I've understood is that basically you can design a CBDC system which is entirely private or entirely open to authorities. What is very clear is that no central bank will create a system which is similar to banknote, which is completely private. The reason is also linked to the fact that there will be a use of intermediaries, because the intermediaries need to comply to the anti-money laundering and the counter financing of terrorism and rules, and therefore they will have to apply AML/CTF rules. But beyond that, there are a number of guarantees. First of all, the central banks will not see the details. The intermediaries will see the details, as it is the case today for bank money. But the central bank will not see the details of the transactions. And there is, even in most schemes, including the digital euro, there is the idea that for very small amounts, the payments could even remain anonymous, completely anonymous. And in particular, those which can be processed offline. And I think somebody else later will speak about that. Next feature, three additional features. First, contrary to what you hear sometimes, CBDC will, in most cases, not be DLT based. It's different in some smaller economy, which are really under maybe the influence of software providers. But in the main economies, it is unlikely that DLT will be used, simply because central banks hesitate to use new technology for something which is so critical for the society. Second point, the CBDC will not be programmable. And this is for a simple reason that for central banks, money is fungible. So they will not introduce anything which could make money sometimes not completely fungible. What central banks say is that it's payments which should be programmable if needed, if requested, not the money itself. But this is maybe just a question of semantics. I'm not sure whether there is a debate about that. Remuneration, I'll be very quick. Most CBDC schemes allow for remuneration, positive or negative. But very likely, at least in the present context, it is very likely that the remuneration will be set at 0, as it is the case for banknotes. Now, moving to the challenges, and I would say there is 2 main challenges. First is how to raise the interest of intermediaries. Regulated non-banks may be interested, but banks will lose on the seigniorage. That is to say, on their interest margin. And therefore, what do central banks offer them? First, they offer and it is clearly specified in a digital euro that the banks will be preventing from charging users. So the accounts should be offered, the CBDC account should be offered for free. Of course, it's the basic usage which will be free. Any value-added solution could be charged. Of course, the digital euro also clarifies that they could be still merchant service charges, as it is the case for card schemes today, but these will be limited by law. This is what they say in the digital euro. As a result, in my understanding, it is very likely that central banks will have to remunerate the intermediaries for the provision of CBDC services. This is not something which is said by the ECB for the moment, but honestly, I see no other solution for them than to accept to move back parts of the seigniorage to the banking sector. This is a major challenge which is not really solved. And the other one is even maybe more serious. It is, even if the intermediaries were not to drag their feet too much, then a question would remain: will there be a demand for CBDC from the final users? And this question is particularly relevant because in mature economies where deposit insurance has largely eliminated the difference between central bank money and bank money, it is very difficult to say how the final users could be interested. So to conclude my presentation, I think that the question for CBDC is not the motivations. The motivation for CBDC issuance do exist, but they are of a political nature for the good of the society as a whole. However, the advantages are not visible to individuals for whom CBDC will just be an option. And therefore, in my understanding, central banks still have to explain how they will solve this problem. Thank you very much. Christian, I move the floor back to you.
The floor is yours, Alex.
Okay, thank you. Today, I would like to share with you some perspective on the governance and operational overview of retail CBDC, as well as provide to you the market status and some projects, live projects that are being rolled out around the world, some initiatives, some lessons learned of these projects, and some major providers that are providing solutions and services to central banks and to the financial ecosystem for retail CBDC implementation. Please. So the CBDC ecosystem, and in particular the retail CBDC ecosystem, is a complex one. It's a hierarchical, multifaceted ecosystem that starts with the government and the legislator which shapes the legal and the regulatory retail CBDC framework in a country. Going to the central bank, which is the institution normally responsible for the issuance of the money and all the monetary policy decisions, implications, and regulatory oversight, delegating to commercial banks and other financial institutions that typically distribute and interoperate with other account systems and the payment systems that can be integrated via different technology providers and fintechs to offer different payment schemes to the citizens, merchants, and end users. So as we can see, it's a very complex ecosystem that involves multiple different parties, each one of them with their own business models, objectives, and preferences on the kind of payment rails design choices. Please, Christian. So in this complex ecosystem, there are at least three roles, three set of needs, and kind of three different business markets for the operational players. The central bank, as today for cash, should keep the currency issuer and controller, and for this they will require CBDC issuance management solution where they can guarantee the security and the efficiency on the distribution of a new CBDC form of money to a public or private sector that shall be accountable and responsible for holding the custody of this new money on this new CBDC and manage all the wallets for merchants and end users. So this private sector, or can be also managed by the public sector, will need some kind of CBDC wallet management solution to authorize CBDC transactions and integrate with the different ecosystem that it is already in place for payment systems. And in the end of the chain, there will be also the need to integrate the existing or new payment system interfaces that are already out there to promote competition and to promote the interoperability between the different payment rails that are already in place. Christian? So there are different analyzed governance models for the issuance and distribution of CBDC. The literature typically reveals a one-tier governance model, but more recently everyone is speaking about a two-tier indirect model where the central bank authorizes participants into their CBDC network under, of course, the appropriate regulation and controls, which is basically the model being used by today with cash. The central bank issues the CBDC money and then distributes it to the financial institutions, namely commercial banks, that are the ones responsible to provide the communication and payment channels to the end users. So this means that the money itself is backed up the value by the central bank, but the network completes with all the stakeholders that are already today involved in the financial ecosystem. And I think that the majority of the central banks around the world will adopt this second-tier indirect model for different reasons. First, because they don't want to be disruptive on the governance models that are already being used. And second, because especially on emerging markets, the central bank do not have the operational capabilities to reach the end public. So the two-tier model shall be the one mostly adopted worldwide by central banks. Okay, so The design of a retail CBDC platform has multiple risks, advantages, and decision points. While a central bank and the country wants to move into this financial innovation, they will need really a careful analysis on the requirements for its implementation. The main decision points are, of course, starting with defining very well what are the objectives and use cases for adopting a retail CBDC, and this will differ from country to country. Major advanced countries will have some priorities that will not be the same for other emerging countries. So financial inclusion, accessibility, how to inject monetary policy using CBDC needs to be initially addressed. The technology and infrastructure, as referred earlier by Mr. Godeffroy, is also a critical decision point. Today, we are always speaking about using distributed ledger technologies or more centralized solutions using conventional databases, as today we are using for the payment systems. Scalability is also a technology point that needs to be addressed. The technology needs to address all the population and not just a little segment of it. Legal and regulatory framework needs to be in place also to protect the new CBDC money, to ensure that there is the compliance, there is the consumer protection, there is some level of privacy and rules for anti-money laundering and know your customer, as today we are using for commercial banks. Also, as referred before, the issuance and distribution model should also be chosen by regulators and the central bank, who produces, who distributes, how the ecosystem is controlled using CBDC. Privacy and security risks have been widely discussed on security, cyber threats, hacking, fraud, the transparency and oversight of the CBDC transactions. Interoperability is key for the adoption of this new form of CBDC money. We cannot accept a payment system that is being provided by the state in a silos mode individually. We always need to look into the broad aspect of the network, and all the payment systems and all the providers shall be one way or the other connected with all the other external payment systems to provide interoperability and choices for the end user. Monetary policy has been referred before, also need to be very well addressed in terms of policy operations, reserves thresholds with regards with CBDC, interest rates, limits, fees. All these shall be carefully analyzed and defined before launching the CBDC project. And of course, due to the recent innovation, how can smart contracts be leveraged also for CBDC on programmable payments in principle, but of course also in a philosophical discussion on programmable CBDC money can also be discussed. So all these are the major critical decision points that the central bank and the government shall address before launching a CBDC. Now, I would like to give you a very high-level overview on the market status of retail CBDC. There are all the major international financial organizations have been in the past years, especially after COVID, have been pushing and engaged in very discussions with all the major stakeholders around retail CBDCs and wholesale CBDCs as well. They have been looking and helping throughout various pilots, projects and initiatives around the world. And of course, these major organizations are very well known as the G20, the IMF, BIS, the World Bank, and others more locally, geographically located other institutions, and all the central banks, or almost all the central banks that issue some form of money today, are actively studying or even piloting some CBDC projects. So this picture has been taken from cbdctracker.org, which is an organization that updates on the CBDC initiatives monthly. And normally they update the new initiatives once a month. We can see that there are many countries pursuing today retail CBDC. Of course, most of them are still in a research or proof of concept stage, but already some of them are already piloting in a production environment, or have even launched and rolled out CBDC projects for the entire country. And from these countries that have already launched and rolled out their initiatives, there are today 11, a little bit more advanced. Nigeria, Bahamas, Jamaica, the Eastern Caribbeans have been lately, in the past 3 years, have launched their own retail CBDC system, which is widely available for the citizens of those countries. Many other countries are in research and development mode, especially in the some advanced countries. Of course, in the center of Africa, there are not yet many initiatives, but I think that it's a question of time for them to also accept some of these innovations coming from their neighbor countries. So the most advanced retail CBDC projects that we can refer, they have different motivations and are applied for different use cases. The digital yuan in China is the one that has been quickly rolled out across the country. And their main motivations are, of course, the state control over private payments, as well as financial inclusion and some anti-money laundering requirements in the country. So it's being already used widely in many cities in China for retail payments, online shopping, and peer-to-peer transfers. The Bahamas $10 project, it has been launched especially for financial inclusion and for the reach of the population, especially in remote areas. It was difficult even to distribute the central bank cash money in the region. So CBDC is a real motivation for the Bahamas to push for all the payments in the country, and as well as remittances with neighbor countries. Nigeria Digital EESTEL project has started also 2 or 3 years ago, and their main goals is, again, in Africa, for financial inclusion in a country where more than 50% of the population do not still hold a bank account, as well as to reduce the cost of the cash handling, production and distribution of cash. Today, it is being accepted by retail payment institutions. As far as we know, and as far as some public information is available, adoption of the EESTEL is being a challenge in the country, and the government is implementing some ways, some measures to maximize the adoption of the EESTEL. In Eastern Caribbean countries as well, there is a push for the adoption of CBDC for retail transactions and for cross-border payments. Their main motivations is, of course, the financial inclusion, but as well to provide some social capabilities in times of disaster and recovery events, for example, hurricane. On the other spectrum, for example, in Sweden, the Nordic country, the e-krona project motivation is really the use of cash. Almost no one living in Sweden today is using cash. Cash is really kind of rare. Everyone has access to bank accounts and electronic payment systems. So the central bank is losing a little of their mandate and their control by providing money to the public. So in Sweden, the use cases for implementing an e-krona project is for being used and competing with private payments in retail transactions and peer-to-peer. Also in Uruguay, and I must refer this one because I've been involved in this project, the ePeso project that started in 2017 and was operationally until 2018, was one of the initial pilot projects on retail CBDC worldwide. It was meant for really financial inclusion, but also for the physical security of people and businesses that need to handle cash daily. All the merchants and the transportations still use today a lot of cash, and this represents a big threat for physical security of the persons that need to move with handling that cash. This project, this pilot project, was providing peer-to-peer transactions, bill payments, street shopping to authorized merchants, and as I referred before, was one of the pioneers in retail CBDC experimentations. In Ghana, there is also a recent project, the SCD project, which, as for any other African countries, the main motivation is financial inclusion and also helping on the payment regulation, especially on the new fintechs that are providing payment communication channels in the country. They see the CBDC as a way to maximize financial inclusion, but also to help them out to regulate better the payment systems that are emerging in the country. And it is being used in retail payment systems. Okay, so just to give you a very high-level picture, today there are more than 130 registered initiatives towards retail plus wholesale CBDC. This picture is also provided by AtlanticCouncil.org, and it keeps track of all the projects on CBDC, both retail and wholesale. Some countries are moving with wholesale CBDC, especially for interbanking settlements. But if we analyze these numbers, we can see that nearly 80% of these 130 registered initiatives are on the retail CBDC space and are quickly moving towards piloting and rollout projects. Christian. So, of course, all these researches, proof of concepts, pilots, and rollout projects that have been deployed in the past years have brought some lessons learned, and the major lesson learned that we can take from all these initiatives is that there is no one size fits all approach when talking about CBDC design. Each country have their own objectives, their own priorities, and each country should look into their own ecosystem and then understand with the businesses and end users where the CBDC could improve their financial ecosystem. So it's mandatory to have a global cooperation with international bodies to reach some kind of CBDC payment standards and a regulatory framework that can serve as guidelines for each country that wants to pursue CBDC. It's critical, in my view, to get all the stakeholders in the financial ecosystem involved from the beginning. That is the only way to assure that all the parties are motivated, that all the technology providers are helping building up the solutions, and even that the public, merchants, and end users understand the advantages on adopting CBDC. Technology evaluation is also, of course, a topic that should be carefully evaluated in terms of scalability, security, privacy, interoperability with external payment systems. The public engagement is really critical, as referred before. Public needs to trust and to accept the CBDC. Otherwise, the central bank and the country can deploy any CBDC or the best CBDC system out there, but if it is not being used, it's worthless in the end. And for that, the country might need to better educate the population in general, or even to provide some adoption incentives to incentivize merchants, businesses, and end users to start using CBDC. And of course, especially on the case of also wholesale CBDC, cross-border and regulatory harmonization on currency exchanges while using some form of CBDC shall be also very carefully addressed by the countries that are pursuing these initiatives. Lastly, I would like just to refer a little bit on the major providers, technology providers for CBDC deployment. Providers have been emerging from different technological domains, from startups to well-known established global services providers. I'm not going to mention any particular provider in particular, but I would like to provide you a global split and overview on where these providers are coming from. And they are coming from initially from the currency printing industry that were already used to provide some technology to central banks for the currency printing, sorting, and distribution. Some startups are pure CBDC players today. They have developed their own standard solutions to offer to any central banks and to customize their off-the-shelf solutions to central banks. Others come from the DLT and blockchain innovation technologies that are being used for cryptocurrencies channels that can be as well customized for CBDC. Some come from internet and payment services. Well-known digital payment services and product providers are also very interested in pursuing this CBDC market, and as well as other consulting and IT service providers are providing their solutions and especially services to advise central banks and governments towards the roadmap of CBDC. So all these companies are in one or another way offering their expertise, being their expertise already developed on an off-the-shelf solution that typically can be customizable for different requirements in a country, or others are providing bespoke development services and specific country requirements development as the major consulting companies and blockchain companies as well. And others are trying to open the CBDC as a service, operating some kind of CBDC platform on the behalf of the central bank, especially on central banks that may not have the practical operational capability to deploy and operate and run a CBDC platform. So some companies are trying to open the market as a service as well, in collaboration with other technology and service partners. So I think this is it. Thank you very much.
Thank you, Alex, for this extensive and clear presentation. So I will go into trying to draw a picture of CBDC and payments. I may have to rush a little bit because we are getting a bit out of time. So this presentation will be a lot about digital euro view. It would be interesting to expand it. I try to expand a bit, but I started with from digital euro. So this is the original planning of the investigation phase of digital euro, as mentioned by Jean-Michel already. So this phase is completed now. Okay, this resembles a bit what Alex has just shown. So the usual split of roles and the end user at the end, and the way the digital euro model, the digital euro view on this is the following. There would be a creation of some kind of digital euro scheme where these two categories of intermediaries would be actually defined or identified with as similar to what is described in the PSD2, so ES, PSP, AISP, PISPs. The euro systems would provide not only the issuance and redemption, but the intention is to be involved in the online settlement service, which is beyond what other central banks have opted for. It is expected that the PSP would provide QR code-based, NFC-based, and alias proxy payment methods to the public to access to the funds in the wallets. And it is also considered that the digital euro can be integrated and should be integrated in existing banking and payment app. But it is also considered by a euro system to develop some basic applications that would be available to any euro area citizen for access to basic services based on the wallets. Okay. So again, a generic view of what would be a generic CBDC infrastructure model. So you would have to have some kind of issuance and redemption network between the central bank and the distribution intermediaries, or let's say wallet service providers. You would need to have some settlement network or capability between these wallet service providers, and there would need to be some service APIs to open to give access to the wallet funds to payment front end or payment intermediaries. These networks can be blockchain based, message based, or mixed technologies. And they may also, especially the two first ones, these two networks could be joined or split for security reasons, for instance, to protect the issuance redemption of the central bank from other from actions on the settlement network. Although settlement network is anyway a closed network, of course, it's not open to everybody. And the view of the digital euro is that the euro system, as I said a bit earlier, would take care of these two networks, of these two functions for issuance redemption and settlement. And of course, these interfaces here are the usual or extended ones that are currently that have been introduced by PSD2. So maybe some API standards would need to be upgraded for supporting the access to wallet account, CBDC accounts, in addition to bank accounts. There's not so much technicalities known at this stage, of course. Okay. So there would be a digital euro wallet or account. ECB tends to use accounts, other central banks are using wallet. Of course, there would be some opening onboarding, closing offboarding, the provision of payment instrument, and the linking to other accounts, typically bank accounts for actually cash in, cash out on this digital euro wallet. Well, the usual suspects, I would say, all this. And it is important, of course, that funding and defunding, this is the wording of ECB, could be possible between cash and digital euro and private money and digital euro. What is very specific is the waterfall and reverse waterfall features already mentioned by Jean-Michel, and he gave us a reason for this to limit the accumulation of digital euro, typically at the merchants. Okay, I will move quickly to the next one. Online and offline payments are considered for digital euro. That means that there would be two models for validation and settlement. The online one, where payer and payee are connected to a respective payment service provider or wallet service providers, and offline, where none of them is connected. As we have seen, of course, the online model is based on the validation and settlement provided by Eurosystem. And on the offline model, okay, of course, there would need to be some peer-to-peer validation settlement, transactions, holdings recorded in hardware secure elements of the user devices, and some local fraud detection or EML CFT could be applied as part of the validation. And of course, a key feature is that consecutive offline payments must be supported. Okay, this offline payment thing, this capability is not specific to CBDC. We could require it for private money or whatever, but it has emerged as a major requirement for CBDC. Already, Jean-Michel already touched this, but it's basically support financial inclusion, ensure that there is an ubiquitous access, even when you don't have any coverage, network coverage, because CBDC is a public good. And there is also, can be used as a disaster resilient means of payment, along with cash, probably real physical cash. in case of disaster, with networks down. So there are a few solutions proposed by some vendors that make use of different secure end user devices that you can guess: smartphones, some SIM add-ons, smart cards, and some dedicated devices like some kind of physical token. The key thing is that the solution targeting the complete population, or even the population not under coverage, so maybe less who has less funds to devote to buy a device. So it must be produced and available for at an acceptable and affordable cost, either for the population or the authorities if they would want to sponsor this kind of devices for their population or some part of the population. The offline solution technically can be, or the offline platform can be integrated with the online one, meaning you would basically top up your local offline wallet from your online wallet, or you can also have a separate online and offline platforms where you can top up offline wallets directly with private money, for instance. Okay, then the compensation model, which is the wording from ECB for the economic drivers for intermediaries. So first, there's some obligation. If digital euro would be legal tender, then merchant would be obliged to accept it. But ECB said it would not be necessary to, or well, maybe it's a legislative issue, compulsory for consumer to use it. The economic incentives considered by ECB is that already said by Jean-Michel. Basic services provided for free to individuals. Merchant would be charged by the PSP for acquisition with some limits in the law, and some interchange fees between PSP would compensate the distributing PSP for the basic service cost, and this would be shared from the acquiring PSP. There is another element in the business aspects of digital euro, is that there would be an obligation of portability. So that means that an end user could ask for moving his holdings and history from one PSP to another, exactly in the same way we can port our mobile numbers today. Okay, quick on money flows. Funding is about for Alice to top up here a wallet, so it will move some private money to distributing PSP. There would be some issuance by the Euro system, maybe not at the time of the transaction, but there will be some issuance for this. Payments between the PSPs, waterfall to convert into private money and avoid accumulation of digital euro at the merchant. Redemption to Euro system at some point in time. And there is these fees, as already mentioned, that could move from the merchant, the acquiring PSP, to the distributing PSP, although it's not clear in which money it would be collected. So we could see the digital euro settlement system as a new rail for pan-European payments. And of course, there would be, as also Jean-Michel mentioned, there would be regulated banks and PSPs, or let's say regulated but non-banks players on this, connected to these rails. There's a question of identity. The identification of CBDC orders, of course, depends on jurisdiction laws. There are different models discussed where, and also mentioned, that could be anonymous spending under certain value. Today, the ECB doesn't make any link with the European Digital Identity Wallet with CBDC. Maybe this will come because it's two different authorities looking into this. Privacy, I will not go into details. Basically, ECB is applying the principle that Jean-Michel described. Okay, no personal data, even during settlements, will be shared with ECB, and basically it's the same level of privacy as a bank account currently. Okay, how to access to digital euro? Any resident of the euro would have access, but possibly also non-resident. As there would be, financial inclusion is a key objective. There is this intention for Eurosystem to design a basic digital euro app with the necessary features for people with low skills in digital and financial, and also with disabilities. ECB also mentioned the digital euro payment card that would be made available to the public. And of course, using cash for funding defunding is key to financial inclusion. Digital euro use cases listed by ECB. I won't go into this because we are running out of time, but you know already them. Okay, but what is the current idea of a possible rollout by ECB? They would prioritize on the first release the person-to-person, e-commerce, and customer-to-government. For the reasons listed here, network effects, and filling a gap in the use of central bank money in the case of e-commerce, for instance. And the second release would deal with physical payments or proximity payments, because the basic idea is that these require times because of the various upgrade of infrastructures and terminals that is needed to support this. Okay, there is two other missing use case in the previous release, one release 2, but this is still in the picture of ECB. There is no description of using a digital euro on a public blockchain, for instance, to compete directly with stablecoins for payments there. But there are, at the wholesale level, there are clearly some experiments and projects to use a blockchain and digital asset concept for new financial market infrastructure. Okay, then let me skip this one. So it's about car networks. Yeah, maybe it's not so important. So the digital euro app, I will skip this one. Okay, digital euro, the next step. Actually, yesterday, there had been this governing council at Eurosystem, and they decided, as anticipated by Jean-Michel, that they will go to the preparation phase. So it's starting next month and should last 2 years. They describe it as they will finalize the rule book for the digital euro scheme, and they will select providers to develop the digital euro platform and infrastructure. And this does not this is not committing to any issuance, and the legislative process is the one that will decide on this. Okay, so I move quickly to cryptocurrencies and stablecoin and payment. So similarly, so how to access to cryptocurrencies? basically, in the whole time, you would need to run some nodes, some IT stuff. You would have an address to identify yourself on the network, and associated with this, you would have a pair of cryptographic keys, and you would sign the transaction on the network. But there is this concept of crypto wallet that is a convenience feature, because it allows you to record safely your addresses and keys. It is accepted as a means of payment by some merchant of service providers. It doesn't directly store cryptocurrency. It's really storing addresses and keys, mostly keys. Okay, I will jump about this various type of wallets. But basically, wallets are offered by entities, so either private or communities. So you need to trust them. So it's similar to you are trusting them to deposit your claims on your holdings. Okay, originally it was designed for cryptocurrencies was originally designed for day-to-day payment, but it didn't happen this way, as we know. Today, they have developed as payment means in the so-called Web3 services in a kind of crypto economy. And there are many of these services. You can see some list here. So you can services for swapping tokens, services for lending and borrowing tokens, services to buy some virtual real estate in metaverse. All these services are paid with their own token. So that's one reason for the multiplication of tokens. Okay. Then what are the flows between the two economies, the crypto and traditional economy? You have stablecoin issuers that are of course maintaining some reserved in fiat in commercial banks, exchange and traders that needs to exchange fiat, that needs crypto for exchanging that needs fiat for exchanging for crypto. You have some digital asset managers in the traditional finance that are using actually also interested in digital assets on the Web3 side of things. So these are some flows. So these are some connection between traditional economy and traditional finance and the world of crypto. Then there is a special case of crypto cards that are offered by some schemes. Actually, both Visa and MasterCard are offering this with some partners in the world of traditional and in the world of crypto. So the concept is that the consumer is paying in crypto and the merchant receives fiat, actually. And my last slide is a bit about statistics. The share of crypto, and most important is that today, the share of cryptocurrency payments in e-commerce worldwide is below 0.5% of the overall payments in e-commerce. So, and there's no anticipation of a big increase in the short term. Yeah, and the other elements here are names of players, and as I said, MasterCard, Visa are already players in this field, bridging fiat and cryptos. Okay, sorry, Katie Rosalie. Now the floor is yours. Just tell me when I click.
Thank you. I will try to summarize my presentation to only focus on the main regulation. Due to time constraint, because we already present in the different presentation several key issues related to providers, to the qualification of the crypto assets, regarding to the technical issues linked to cybersecurity, identity, data protection. So the idea of this presentation is to explain that a part of the technical complexity of this kind of crypto asset, there is also, unfortunately, complexity in terms of regulation that may, we don't know, applicable. And I decide to focus on three kind of regulation. The MiCA regulation, which is related to the market in crypto assets regulation. To focus then on the digital euro and the CBDC regulation that is in project for the moment, the proposal of the regulation, and to try to make a link between all of these services and providers and the existing regulation applicable to the identification, which is the EESTEL regulation that you are already referring to, and the evolution of the EESTEL regulation with the EESTEL 2 regulation and the implementation of the wallet. So next slide, please. So the MiCA regulation is the new revolution in the regulation. It is something that is similar to what we have seen with the PSD2, which regulates a specific actor, which define specific services. Here with the MiCA regulation, there is an harmonized regulation that will be applicable to crypto assets, which is not the case yet, because at this time we have different regulation in each countries, in each European countries. And with this new regulation, the purpose is to regulate, to protect, and to supervise. Based on the actual context, we can understand that it is very important to regulate and supervise to be sure that the innovation will be developed in a secure ecosystem, and be sure that the user of these services will benefit of transparency and security. Next slide, please. So this regulation is entering into force on June this year and will be applicable in each European countries at the end of December next year, 2024, with some specific rules, technical rules that we are waiting for the moment. Which means that with this regulation, we will have an harmonized situation in all of the European countries. Next slide, please. So this regulation will define some rules applicable to providers, to issuers, to crypto assets, and to services. Usually, it is a way that the regulation address a specific market. There is a 3K provision in the MiCA regulation. One is regarding the offering of the documentation. So it is something that is similar to a prospectus, but it's not a prospectus because it's not a financial instrument. So we say that it's a white paper. The other part of the MiCA regulation is related to the organizational requirements, which means that the regulation implements some licensing requirements for issuers, and also for providers of cryptocurrency related services. And there is also a part dedicated to conduct of business rules. So in order to be sure that the services will be provided in a secure way. Next slide, please. So regarding the crypto assets, we use such term in usual language for several kinds of crypto assets, of digital assets. And it is, of course, something that refers to a digital representation of a value or of a right that's able to be transferred and stored electronically using distributed ledger technology or similar technology. So we already see that there is some neutral also reference to the technology. But it is important to understand that all crypto assets will not be regulated through MiCA. Other regulation may be applicable. So there will be 3 regulatory categories of crypto assets. The financial instrument that will be regulated under MiFID, so the regulation applicable to financial instruments, the crypto asset under MiCA, and some crypto assets that will not be regulated, so that will be qualified as unregulated product. If we focus on the regulated crypto assets under MiCA, there is 3 different crypto assets. The asset reference, which is a crypto asset that is not an electronic money token, because electronic money token is another category of crypto asset. And these crypto assets will represent a stable value by referencing to another value or right of combination, including one or more official currency. So it refers to stablecoin. Electronic money token, it is also something that could be qualified as stablecoin, because here we have a reference to a stable value by reference to an official currency. So in the first one, you can refer to several value, currency, or other digital asset. In the second one, you can refer to one value of an official currency. And there is another kind of crypto asset, which is the utility token. In this case, it is very specific because this utility token will be used to have some access to goods or services provided by a supplier. For example, an utility token that will be issued by a cloud provider, for example. There is, as I said, some crypto assets that will be qualified as financial instrument and then will not be regulated under MiCA. They will be regulated under MiFID, which is already which apply to all financial instruments. And there are some crypto assets that are non-fungible and unique. We usually refer to NFTs that in some cases cannot be regulated under MiCA. So it is the way that the crypto assets are defined in this regulation. Next slide, please. No, thank you. Regarding the issuer and the public offering of crypto asset regulation, again, there is different category. There is some issuer of crypto assets that are not asset reference token or e-money token. So if an issuer will issue other crypto assets than the one that are qualified as asset reference tokens or e-money tokens, then they will have to comply with some rules of conduct and also to provide a white paper, and in some cases can benefit of some exemptions, which is the first level of the categorization of the issuers. The other one is the issuer of e-money token. And when you said e-money, you think, of course, of electronic money institution or credit institution that are already authorized to provide electronic money services. So in such case, the token will be issued by credit institution or electronic money institution. And the third one category of issuer is the issuer of asset reference token to the public, which is more complicated. And for this kind of issuer, it can be provided through a company that is established in Europe, of course, and that is authorized in its own member state. It could be also a credit institution, because these services, of course, can be provided also by a credit institution, and it is needed to be licensed in a country. In order to do that, they have to provide several information. So I will not detail all the requirement for the licensing of this issuer, because we do not have the time, but it's something that is similar to the licensing process of fintech in other areas. So a description of the policy implemented, be sure that the system is secure, and the qualification, of course, of the token that will be provided, which is the key in terms of regulation, because each time you have to be sure that the qualification of the crypto asset is the right one in order to define which regime of issuer will be applicable and which license or registration will be needed. Can we move to the other slide, please? So we already see that the MiCA regulation define the crypto asset, define who will be the issuer and the regime applicable to the issuer of the crypto asset. But there is also other kind of people that will be regulated, which is the provider of services related to crypto assets. These providers of crypto assets are defined in the MiCA regulation, which means that they will be a legal person that will have as a professional activity services related to crypto assets. They will provide such services to clients on a professional basis. They are established in Europe, and they need to be authorized as a CASP, or they could also provide such services under some specific financial regulation, such as electronic money institution or credit institution. So the CASP registration is a crypto asset service provider regime, which will be the equivalent to the PSP in payment services, so payment service provider when it's only payment services, and crypto asset service provider when we are referring to crypto assets. But also it is possible to apply both regimes together depending on the offer of the provider of services. And as you see, the qualification of the crypto asset service provider is defined by reference to the crypto asset services, which means that, again, it will be necessary to identify which services will be provided by the providers in order to define if it needs to be qualified and registered, licensed, as a crypto asset service provider. So there is a list of services. Of course, we refer to custody services, for example, to trading platform, to the exchange of crypto assets against other crypto assets or against fiat. So a lot of services which are defined. If the service that the crypto asset provider is not qualified as one of the services that is in the list, then it will not be necessary to be authorized as a crypto asset service providers. So each time it is very important to qualify the activity. Next slide, please. So it is a general presentation of the MiCA regulation, but what you have to know is that we are waiting for several technical standards, which is something that is new. The technical standards wasn't required by the past in order to explain a directive, European directive. It is something that we see already regarding payment services several years ago. Each time you have a main legal instrument referring to technical standards that will be developed in order to provide more precision, more information, more details on the way that the services has to be implemented. So there is 3 rounds of technical standards that will be offered for consultation to the public. The first round of consultation will end, or has end, because it was end on the 12th of October. So as we heard the 19th, the first round of consultation is ending. There is a second round of consultation. So you see that there is a lot of technical rules that have to be defined. Can you move to the next slide, please? So here we have now all the technical standards that we are waiting. So the second consultation will be until the 14th of December of this year, and the final packet of technical standards will be published in 2024. We expect on Q1. Next slide, please. So as you see, there is some link between the MiCA regulation, the MiFID regulation, the e-money regulation. So there is also in this text some grandfathering transitional provision applicable to the providers that are already authorized at European level under the MiFID regulation or the e-money regulation. Next slide, please. The issue is that regarding a crypto asset, as I said previously, there is no harmonized regulation. The only topics that was harmonized at EU level regarding a crypto asset was related to anti-money laundering regulation. But some countries, and for example, France, has already implemented a specific regime with a registration for a crypto asset provider. In France, the regime is related to digital asset service providers, the DASP. So today we have 100 DASP registered within the IMF. 3 have been deregistered, and we only have 1 license, DASP. The reason why is because the registration was mandatory for some services. It was mandatory to be registered in France in order to be able to provide custody of digital assets, for example, or to have a trading platform of digital assets. So it is a reason why we have a lot of crypto asset providers that are already registered as a DASP in France. The other regime that was implemented in the French regulation is a license regime. But as you see, there is only one DAS that is licensed. It is the Société Générale. And the reason why is because the global framework also for the licensing regime wasn't finalized, and the license was something that was optional. It is not mandatory. So the company had to decide to comply with additional rules in order to require the license. And one of these rules is to be established in France, which was not the case for the registration. And as we have a lot of foreign companies that are registered, they do not have to be established in France to provide their services, only to be registered. We can move to the other slide, please. And also, in order to prepare the compliance with MiCA regulation, the IMF already, and the law already modified the regime applicable for the registration. So, as you can see, in July, a new regime of registration was implemented in France with more requirements applicable to providers. So I will not make the global list, but just to explain that it was something that was more complex, requiring some investment time for the providers to be sure that they comply with all the rules. And the idea is also to prepare MiCA requirements. Next slide, please. So here we summarize the fact that for the providers that are already licensed or registered under the French regime, they may benefit of this registration in order to simplify the process to apply as a CASP registration under MiCA regulation. So you will say, okay, but you talk only about crypto asset regulation, and for the moment we do not talk about CBDC, and we are fully aware now that CBDC can only be issued by a central bank and not through crypto asset providers. You're right. But again, here we have a specific project of regulation, and you see that it is the same structure. So the text will define the services, the providers, the issuers, and the digital currency, what could be qualified as a digital currency. You can move to the other, thank you. And if you have a question, also in the MiCA regulation, there is a specific exclusion saying that central banks are not under the regulation of MiCA. So it is a specific regime that will be applicable. So the issuer, based on the European treaties, will be the European Central Bank and the National Central Bank that will be authorized to issue digital euro based on a specific authorization provided by the European Central Bank. And the reason for that is that, as it was indicated previously, the digital euro will be under the direct liability of the European Central Bank or a national central bank. They are the issuer, they are liable for such currency. So there is a regulatory proposal, which is a package with a legislative proposal establishing the legal framework for the possible issuance of a digital euro. So the proposal for regulation on the establishment of the digital euro that has been published in June, and a legislative proposal on the legal tender related to EU Eurocash, to safeguard the possibility to have some cash. So in the previous one, please. In the regulation, so there is some definition regarding the digital currency. So they define the digital euro, as it was already indicated. They define also the digital euro payment transaction and the digital euro payment account. So we have similar definition for the different category of services. We can move now to the next slide. Thank you. And a part of the definition of the digital currency, there is also, as always, a list of services. So there is two kinds of services: basic digital euro payment services for natural person, and digital euro payment services in general. So I will not detail all the list, but it is mainly to have the same services as you have already under payment services through digital currency. We can move to the other text. So this one is of interest because here we also confirm that in the regulation there is a definition of the providers. So there is digital euro distributed that will be distributed by payment service providers, something that we already known in the regulation. And digital euro user, of course, will only have the possibility to enter into a contractual relationship with payment services providers. There is no direct contract with the European Central Bank. There is another kind of providers that is defined in the project of regulation, which is the provider of support services. And these providers is an entity that will be appointed by the European Central Bank in order to provide services to all payment services providers. And when I read such definition, of course, I ask myself, is it something that is similar to trust service providers under EESTEL regulation? What will be the link between the two qualifications? And also in the regulation, there is a list of personal data that such provider of support services will be authorized to manage. So the information on digital euro payment account, including the unique digital euro account identifier, information on digital euro payment transaction, information on device internet protocol address range. So we understand that there is some link between the different regulation and regime. We can move now to the next slide, please. So all the account servicing payment services providers under the directive could be provided through credit institution, electronic money institution, payment institution, and they should be able to provide digital euro payment account and related digital euro payment services as defined by the text at European level. So with a passport regime. Also, please note that crypto asset services providers, so the new category implemented through MiCA regulation, will also, in some cases, be able to provide account services, payment service, provide services linked to the payment account and allow it, in some cases, to distribute the digital euro. Account services, payment services providers is defined in the PSD2. So again, there is some link between the different regulations. Next slide, please. So we already identify that there is some link between the different regulations, but maybe we have some additional information in the text. What is the EESTEL regulation? So I said at in the introduction. So we move from the EESTEL 1 regulation to the EESTEL 2 regulation. We are waiting for technical rules regarding EESTEL 2 regulation, but these corpus of regulation define electronic identification, authentication, and trust services providers. So it is related to the identification and authentication and security. We can move to the other slide. So you are already aware of the electronic signature and other trust services. The one which is new and that have more link with what we just discussed is, of course, the EU Digital Identity Wallet that will be implemented through EESTEL 2 with a global framework in order to provide to individuals a digital wallet in a secure form and in a convenient form. That will be that may be used at European level, so on a cross-border way, with a European recognition between the different countries. We can move now to the next slide. So the European Digital Identity Wallet has to facilitate digital transaction, is also a specific reference to the fact that the European Digital Wallet has to contribute to the effective universal access to and use of the digital euro. The European Digital Wallet also have to ensure data protection and privacy. And based on user choice, it could be possible to use digital wallet for anti-money laundering purposes. And also, there is some reference to the digital identity wallet for the customer experience. And these references are including in the regulation related to CBDC, to digital euro. They said that your user, sorry, the previous one, should be able, if they wish, to onboard and authorize payment with the digital euro by using the European Digital Identity Wallet. So now we have the link. And there is, of course, specific reference in the regulation. If we see the project of Article 25, as you see, there is some reference to interoperability, the integration with the European Digital Identity Wallet, and the fact that the user can rely on the functionalities that will be implemented in the European Digital Identity Wallet. You can now move to the next slide, because I have finished my presentation. So you see, there is for sure a link between all of these different regulations: payment services regulation, MiCA regulation, EESTEL regulation, and digital euro is only part of all of this new framework.
Thank you, Katia, Rosalie. This is very clear. And sorry you had to rush. We were missing a timekeeper, I'm afraid. Okay, Pierre, you want to share some?
We are very, very late, but many thanks for everybody for this understanding presentation. I have some questions coming from the audience, especially first is a question coming from Arnaud, who asks, Arnaud Crozet. We asking to say we have 2 years preparation phase. but we have no really decision to implement digital currency in Europe. Who can help us in this way? In fact, the RTS will be available, what I have understood, by mid of next year. But we have 2 years, in fact, to issue a final decision coming from European board. Is correct? Who can help us? Jean-Michel, maybe you have some inputs coming from Europe decision.
Sorry, but I did not hear the question. You are.
Question is
perhaps
very
you could
simple.
speak louder.
The question is very simple. We have in fact 2 year now from now to 2026, 2 year preparation phase, but there is no official decision coming from Europe to implement digital money.
I think I haven't seen the recent decision which took place yesterday, I understand, but the point I think which was planned was not to decide on the issuance, but to decide on the preparation. So basically what I understand is that for the next 2 years, the ECB Eurosystem will have to prepare for being ready to issue the digital euro. And my own expectation is that once they are ready, they will issue, unless there is something which really prevents doing it. And I have difficulty to see what it could be, except, for example, if there was a problem on the legal side. But the particularity in Europe, especially the European Parliament and also European governments, the European Council, is that there is no real opposition to the issuance of CBDC, in contrast, for example, with what exists in the US.
Okay.
Yeah. In terms of timeline, my understanding is that the decision from ECB is about their own study cycle and preparation cycle, but doesn't commit about the timeline for the legislative ways and the regulation ways. So they tend to build their project by 2-year pieces. So this time they say we start and it will last 2 years, just because it's kind of internal, some kind of project. So they need to have a deadline. For me, it's more about, let's say, technical and market discussions continuing until the point that in 2 years' time, according to the timeline, from the ECB point of view, they would be ready to switch on the settlement network, blah blah, or things like that. But that doesn't mean that the payment players will be ready to connect, or the regulation will be ready, or the legislation will be ready.
I think what if they have decided for 2 years, it's because they have a plan which tells them that technically they should be ready. Because now what happens is that, as I said, the next stage in a project at the ECB, and probably not just the ECB, but in the ECB, is to pour real money into the project. So it means that they are going to because the ECB is not going to use a provider, an external provider, to prepare the software. They will do that themselves. Not the ECB, but some central banks in the Eurosystem will do that by buying pieces of software here and there, but they will build the system themselves. And if they have said 2 years, it's that because they have a good expectation that they will be able to do that in 2 years. And then I think the question that I asked in my presentation is still even more valid, is that within these 2 years, will they be able to find the intermediaries and the users for using CBDC? The big danger that I see at the moment in the project is that they have not taken care enough to the, let's say, interface with the market. I know that there are a lot of contacts. There is a European ERPB, European Okay, anyway, a contact group with the market. I mean, they have intense discussions with the market. But from what I have heard so far from the ECB, does not convince me that they are ready on that front. So this is maybe the uncertainty in the project.
Okay, thank you. We have to stop now because we are very late, but a very good presentation and very high level presentation from everybody.